please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia, missing Anuj again today. But no missing gloom on the Asian and US markets. The markets themselves have remained unruffled, both Wall Street and Asia, in particular Nikkei, by the news that, or by the inevitability of the tariffs, $34 billion of tit-for-tat tariffs between the US and China. However, we'll have to wait and see. It's a 12-hour deadline that they are waiting for. Now, here's my thesis, Sonia. I believe India actually benefits. Now, I'll tell you why. China obviously has been the worst performing bear market. It loses a lot if the tariffs come into play. But of the $34 billion of goods that are at stake, it's a supply chain. $20 billion of inputs come from Taiwan, Korea and Malaysia. Okay. So if these goods become expensive and therefore are not exportable by China, the losers are actually Taiwan, Korea and Malaysia also. So therefore, in the emerging market basket, the country that has never ever managed to find its way into the supply chain, which is India, may actually be the safe haven. I mean, if EMs in general see a whole host of dollars fleeing them, which we have seen, then this argument doesn't work. But if there is any intra-EM churn because you don't want to invest in China or Malaysia or Korea because of the impending tariffs, then India becomes a safe haven. So if money moves out, of course, everyone loses. But if money is only looking for a home because it is an EM fund, it has to find a home in some EM market, then India becomes a safe haven. There are other benefits. Generally, when there is a tariff war of this nature, consumption is expected to fall. And therefore, commodity prices fall. And, Manisha has been telling us for several days now that metal prices are hitting newer and newer lows. Fall in those metal inputs. Why do you think auto stocks have been doing very well all of this week? It's because obviously their inputs are going to get cheaper. And therefore, the Marutis, the Bajajes, all of them are likely to benefit. The Hitachis, whatever, people who use hot rolled coils are likely to benefit. And then, of course, the fall in consumption is also impacting demand for crude. So sentimentally, of course, for other reasons as well, today crude is also lower. That also is an India positive. So today I want to, and then of course, the fall in consumption is also impacting demand for crude. So sentimentally, of course, for other reasons as well, today crude is also lower. That also is an India positive. So today I want to argue that although there is a pall of gloom over emerging markets, we may actually emerge as an outlier.
Okay, well, that argument was very well put forth, but let me try and play devil's advocate here, right? I mean, I was just reading a JP Morgan report which suggested that of course, the direct impact, as you said, would be what you mentioned. But what about the indirect impact? Tightening credit conditions, lower business confidence, lower jobs, right? Hiring, etc. What would that impact be on the overall economy, global economy? And also, Lata, what could the extent of the economic damage be? Nobody knows as of now. I mean, this is just the first round. If they cool off after the first round, it's fine. But there is an expectation that another $16 billion could come through. So I agree that maybe India could benefit, but globally, do you expect any kind of risk aversion if there is, these kind of issues?
No, actually, you hit the nail on the head. If there is a global, economic slowdown, there is no way India stands out. I mean, absolutely, your point is taken. I'm only speaking for the day and for the near term. That if emerging market funds, GEM funds, want to look for a home and you already have that money. No, GEM funds have seen outflows and then we lose. So as the SGX Nifty is screaming out and telling me that, your thesis is more correct than mine, at this point in time, if there is a global worry about slowdown, then there's no way India escapes. It's just that of the list of emerging markets, we will be the last to lose. That's the minimum point I'm making. We are outperformers in falling markets. We fall less than others. Is my brief point.
Oh, absolutely. And somebody very interestingly put this point forward. They said that the US in the past has used these kind of trade skirmishes to get past developing countries or sort of to win these trade issues with developing countries. But China is a different ballgame altogether. I mean, it's grown 10x since 2001. So it's going to be a tit-for-tat sort of situation, and which could perhaps increase the volatility.
Oh, absolutely. I mean, I think markets are in a bit of denial, both Nikkei and the US markets. We will have to wait and see. No one gains from tariff wars like this. So we have to await what happens 12 hours from now when US tariffs kick in. China has very smartly announced that they will not be the first one to fire. So technically, July 6th, they should be firing their tariffs today. But a Chinese announcement has come in saying that they will not be the first to react. They will wait for July 6th to dawn in the United States and the tariffs to kick in, and theirs will be purely retaliatory and will not be the first gun to fire. But yes, further 16 billion, as you said. And actually, the last Trump speech is a further 500 billion of goods that he's targeting from India, from China.
All right, you said 12 hours from now, we'll have to wait for that. But I think 12 hours from now, everyone's going to be watching the quarterfinals. Nobody is going to be worried about what happens with the trade tariffs. Big, big day, huge games lined up later in the evening. So we have our weekend cut out for us. But let's kickstart the show on that note. By the way, both FIIs and DIIs sold yesterday. So do keep that point on board. It was a minor sell figure, but a sell figure nevertheless from both the foreign institutional and the domestic.
There's a minor domestic skirmish as well. There's one team in my house which wants to watch the football quarterfinals, and there's one that wants to watch India versus England. So there are minor domestic problems as well.
Oh, in every home, I assure you. All sports enthusiasts are divided today. But let's take a look at what our wise experts have to say as we head into trade this Friday morning. Chris Wood of CLSA says the flattening Treasury bond yield curve clearly suggests that American cyclical growth is close to peaking on the impetus provided by tax reform. He says still investors should not exclude the possibility that Trump in due course further extends this cycle by another policy-driven stimulus. He says the obvious policy here is activation of his proposed infrastructure stimulus. On the stock front, Chris says the investment in Vedanta in the Asia ex-Japan long-only portfolio will be removed and replaced by an investment in Australian oil and gas company Woodside Petroleum. Okay, so interesting there. He's removing an Indian company and replacing it with an Australian company.
Vedanta obviously is, I mean, if it is going to be delisted because of London's, ire over supposedly the polluting plant in Tuticorin, then I don't think they have a choice. They just have to move out of Vedanta. We'll get you money market views as well, and they could be important today because remember, yesterday the rupee closed at an all-time low for the rupee. And actually, in the list of positives, I said this is yet another positive. It's extremely positive for India, for all the IT companies, as well as for companies like Bajaj. And Rajiv Bajaj, when he spoke to us earlier this week, specifically said that the weaker rupee is helping him. So anyway, Bhaskar Prana of HDFC Bank says FOMC minutes of the last US Fed meeting has brought out escalating trade tensions as one of the points to watch out for. However, he says seeming progress on EU-US stocks on trade is reassuring. He says the US INR has been under pressure and is hovering around the 69 mark to the dollar, and today we might see the trend continue as crude prices remain high. He expects USD INR pair to trade within the 68.75-69 range for the day.
All right, for the bond market, he says in the bond market he can't foresee any issues except expectations of higher inflation, and hence yields would continue to remain elevated. For today, he expects the 10-year benchmark bond yield to trade within the 7.86 to 7.92% range.
And the most important things that you have to listen to today, the world view from Mangala.
Absolutely. As investors await the implication of the trade tariffs, just watch out for the US markets. They came back with a bang after the 4th July holiday, and we saw gains of almost 200 points on the Dow, as well as the Nasdaq, which was up 1%. And that was primarily because all the tech stocks, they did fairly well. Investors are now bracing for levies on $34 billion worth Chinese goods, but no stopping the Facebook, Amazon, Netflix, as well as Google parent Alphabet movers out there, all of them moving in yesterday's session as well. And interestingly, all the auto stocks also gained. We had gains come by on General Motors as well as Fiat Chrysler, and that's because the US ambassador to Germany has said President Donald Trump could hold off implementing tariffs on European cars. That sentiment actually percolated into the German index as well, which outperformed the other frontline indices in Europe because the automakers out there did fairly well, the likes of Daimler, BMW, as well as Volkswagen. Emerging markets, Russia outperformed with a gain of about 2%. The Brazilian index underperformed. I hope the Brazilian Brazilian team does not underperform today. Watch out for the Asian markets. They opened in the green and now they've moved lower after the opening of both Shanghai as well as Hang Seng. The SGX Nifty indicating a cut of almost 40 points as we start.
Okay, the Brazilian team may underperform, but the performance, the Oscar, will definitely go to Neymar, right? I mean, after what we've been seeing in the past. Thanks so much for that, Mangalam. Well, global markets now await tariffs from the US and China to take effect later in the day today. Ahead of that, Paul Kitney, the chief equity strategist of Daiwa Capital Markets, joins on the phone line from Hong Kong to discuss all of this. Paul, good morning. Thanks so much for joining us. I wanted your view on what the extent of the economic damage could be. So far it depends on how far each side goes. I mean, it could be just one round, maybe it could extend further than that. But what's your base case now?
Good morning, and thank you for having me. Yeah, so it's a great question. I guess we've been having these conversations on and off, since February, March, when we sort of had those the first initial announcements or threats of tariffs being introduced. However, we're still in the realm of a very minor skirmish in terms of trade. $34 billion worth of tariffs is, in terms of magnitude, is relatively small. So really, this is the right equation that we need to be thinking about here is the plurality of the tariffs, the length of time they'll be imposed, and the rate that will be imposed by the various partners. I would also sort of add to that, sort of a question mark over the time frame under which this is all sort of being figured out. So I think what we're seeing here at the moment is not a full-on trade war. Yes, it could potentially escalate into one where there are large-scale tariffs imposed for a long period of time, which would have serious repercussions. But at the moment, what we're seeing is risk premium being affected. We're seeing de-risking taking place in emerging market assets in particular. It's been focused, not unsurprisingly, in China, but it's affected all EM assets, particularly currencies. But at this stage, I'm still in the camp of this being more on the skirmish side and a headwind over the coming sort of weeks and months, rather than derailing the case for emerging markets in EM Asia.
Okay. I'll come to that in a minute, Paul, but when is it D hour? In a couple of hours now? It should be 12 a.m. in Washington, and the tariffs will kick in. When do they actually kick in? How many hours from now?
I think it's in 2 hours. I think you're right. I think it's around, I think it's at midnight. Eastern Standard Time, but I would need to check that. But I believe that is indeed the case.
No, it is. Yeah.
It's over the course of the next couple of. I believe so. I think that's going to be relatively soon. I think that's around 12 o'clock Hong Kong time. Yeah.
So in a couple of hours, do you think the markets will lose their nerve and fall, or do you expect statements? How does the day progress? I mean, I know that's not your job to look, it's a trader's job, but basically, we are very close to the important hour when the tariffs will come in.
Well, I think the way in which this has played out is that I think the anticipation of the tariffs was reflected in a derating in equities until the actual final hour. So over the past 24 hours, we've seen, I guess, some shorts being covered and some positions being squared going into the actual announcement. Now, of course, I think the way this plays out is that we get the announcement, and then we see, you can be assured that the Chinese have a pre-prepared statement waiting for the actual implementation to take place, and then that will come out, and then we'll see from there. The rhetoric so far that we've heard is that they will not extend beyond the same quantum as the US tariffs. Now, if that's indeed the case, that's fully priced in. But the markets could potentially rally in that case.
But China not extending it is one issue. What about the possibility of the US slapping another, tariff on, say, other countries? I mean, the viewpoint is that there are indirect implications that this trade skirmish could have, right? I mean, a hit on business confidence, a hit on hiring, a low economic growth, etc. Do you fear all of that could play out?
I think to some degree it already has. I think this has gone on longer than I think a lot of people have thought. So far, when we look at corporations and the way in which they're doing their planning, if there is uncertainty, they'll hold off on building plant and equipment. Okay. They'll hold off on particular decisions. We're seeing PMIs in Europe starting to roll over. Okay. So that I think Germany in particular I think has shown some effects, real economy effects already. I think from this trade talk.
Okay, then that's is that the way it will play out? That developed markets, money flees to developed markets. Actually, we have been seeing money fleeing out of EMs. Will that trend continue?
I think it can continue so long as we're in this current phase of tit for tat, skirmish behavior. I think we need to step back also and take a look at, as I mentioned before, we need to look at the magnitude of the tariffs. This is not a full-on trade war by any stretch of the imagination, but at the same time, it does weigh on sentiment. And what we're seeing is some haircuts. Most likely occurring on global growth, but not derailing global growth on one hand.
Yes.
And I think on the other hand, we sort of need to take a look at what the implications are. Running into the midterm elections. And this is really what the U.S. side is focusing on. Okay, so there is a time limit, I think.
No, let me put it this way. Somebody, I think it's Bloomberg that has calculated that the impact of these $34 billion on the Chinese economy is 0.2% of the GDP. That's not very significant at all. But be that as it may, you've seen a significant devaluation of the yuan. Now at 6.65, as it approaches 6.7, it has a depreciating impact on other currencies as well. So will you buy any EMs at all? And if you do, which one?
Okay, so that's actually a good point that you've hit on. And one thing we need to look at is trade-weighted baskets of currencies. So on one hand, there's a strength in the US dollar, and then we sort of need to then sort of delineate that against actually what is actually happening to emerging market currencies versus their own trade-weighted indices. So the CFITS index, CFETS in China, has actually been relatively flat. Okay. So PBOC policy has actually been to keep currency flat there. Yes. So where would I like in the region? We still like China, but the H shares, not the A. Okay. We're overweight India and also Thailand.
Okay. So overweight on India, just one final comment. Is the appetite less than what it was about 6 months back? Because even in the Indian markets, we've been facing some heat.
It's faced some heat, but not as much as some other emerging markets, and it also has some defensive characteristics because it's an economy that's much more driven by domestic demand, particularly consumption. And you've also got policy which is also, favorable. So, the price floors of agricultural products designed to boost, rural incomes is a positive ahead of the elections in 2019. We're seeing consumer discretionary hold up well. The banking sector is holding up well, which is sort of part of the reason why we've got several banks in our top picks.
Oh, right. Well, that actually you point out the right things because those are the sectors that are doing well, supposedly rural consumption boosted sectors. Thank you very much, Paul Kitney, for putting all that into perspective and telling us that all hell is not breaking loose. We'll have to wait and see what happens in an hour from now when the tariffs kick in. Thanks a lot for joining us. Well, that's the global topic which we are going to keep coming back to. It's the big theme of the day. But a relatively important theme for India also has been the setback for, can you call it, absconding liquor baron Vijay Mallya. A UK High Court yesterday ruled in favour of Indian banks and allowed the court seizure of Mallya's assets in the United Kingdom for recovery of dues. Pallav Mahopatra, the Deputy Managing Director of State Bank of India, joins us on the phone line. Mr. Mahopatra, thank you very much for your time. Indeed, I know you have a flight to catch. But what happens next? Do you see Indian banks seeking permission, or is it that Mallya will go on appeal and this is it'll be a while before you get a little more by way of money?
Yeah, good morning, Lata. We started this process way back in November 2017 when the DRT, debt recovery certificate issued by DRT, it is also recognized under the Foreign Government Reciprocal Enforcement Act of UK that this is a recognized court which can issue such type of orders. So we first got this registered in the UK court, and in November 2017, there the court in UK passed the order for the world freezing order against the assets of Dr. Mallya and his associates.
Okay.
Now, after that, Dr. Mallya contested this world freezing order, and they paid for setting it aside. Now, the court heard the pleas made by Dr. Mallya, but they found that the banks, whatever documents they produced, and the grounds on which they had basically sought this world freezing order are very, very sound grounds. So they set aside the contest made by Dr. Mallya.
Yeah, but Mr. Mahapatra, you know, at the moment you all appear to have only right to search those houses of Mr. Mallya and get documents. You can't sell them. I mean, it's not as if you're getting any money.
No. See, what happens is, after that, what was the way forward for us? Now, the ownership over there, over the assets, are very, very complex in nature. So if we go and try to seize the assets and go for the sale, that may be a bit difficult for us. So we, all the banks who had given the loan to Dr. Mallya, they decided that, and in consultation with our legal counsel in the UK, that we should go for the bankruptcy of Dr. Mallya and his associates.
So, Mr. Mohapatra, sorry, just to come down to the brass tacks and the numbers, what exactly is the exposure currently that the entire industry has to Kingfisher Airlines, and when can we expect any money to come through at all?
From the foreign assets?
Yes.
No. Overall, from
what is
Mallya
the exposure that the banking sector has to Vijay Mallya and Kingfisher?
It is 6,500 crores plus.
Okay.
And it is not that we have not so far recovered any money. We have recovered close to 950 crore for the entire banking sector. This is by sale of one property in Goa, and also
the shares.
Not only shares. We also got attachment of deposits in various banks of Dr. Mallya and his associates.
Okay.
And we got the money there also.
And how much is the foreign properties?
That valuation so far we have not done.
Okay.
And so with this recent order which was passed on 26th June, where the High Court appointed enforcement officer will go search and seize the movable assets of Dr. Mallya and his associates and then find them.
So you're saying out of 6,500 crores, so far 950 crores has been recovered. Are you hopeful of any recoveries at all over the next, say, 6 to 12 months?
Yes. There will be recovery, but I cannot right away say the amount. But the recovery will be there, and we are quite hopeful that the recovery to the banks plus realization by the enforcement agency will be much more than whatever are the dues.
Okay, if you still have 1 more minute to board your flight, Mr. Mahapatra, can you just tell us a little bit about that Sashakt? When is that AMC and ARC getting formed? Should we expect it in a week or two, or in a month?
It will take a month or two. The first step towards that is the agreement among all the banks.
Oh, okay.
Because for that, this inter-territorial agreement issues were discussed yesterday. And once this is done, then all the banks will be on board.
But then August 27th, you have to move all the assets over 2,000 crore to NCLT, right, if they are not resolved. Will the ARC be ready for you to move it to the ARC before that?
See, the report which was given, that was not for all the 2,000 crore plus exposure.
I agree.
So it is some of these assets where the exposure is more than 2,000 crore plus will definitely go to NCLT.
Okay.
Now, just to catch that August 28th timeline, I don't think that we have to hurry up for formation of the ARC.
All right. Okay, we'll wait and see with interest when that happens and at what prices the assets are moved. Mr. Mahupatra, thank you very much for interacting with us and giving us these details on both Vijay Mallya and the Sashakt plan.
Okay, so all is not lost, right? I mean, they have managed to recover close to 1,000 crores out of that 6,500 crore figure. But let's do one thing. Let's take a break. We'll tell you what you should be doing with individual stocks and, in fact, which are the stocks to focus on this morning. CNBC TV18's top 10 list of stocks when we return. Stay with us.